What if I told you there's a mortgage program that lets you buy a home with absolutely zero down payment? And it's not just for farmers? Most people have never even heard of USDA loans. But if you're buying in a suburban or rural area and your income is within the limits, this could be the most powerful home loan available to you right now. Today we're breaking it all down: what it is, who qualifies, what it costs, and the two types you need to know about. Let's get into it. What is a USDA loan? A USDA loan is a zero down payment mortgage designed to help people buy homes in eligible rural and suburban areas, backed by the U.S. Department of Agriculture. Now here's the part that surprises most people. You do not need to live on a farm or in the middle of nowhere. The USDA's definition of rural includes small towns, suburbs on the outskirts of metro areas, and communities with populations up to 35,000. That covers a lot more of America than most people realize. The USDA doesn't lend you money directly in most cases. Instead, it guarantees the loan, meaning if you default, the USDA covers a portion of the lender's loss. That government backing is what allows lenders to offer you zero down payment and competitive rates. The two types of USDA loans. There are two types of USDA loans, and understanding the difference is key. Type 1, the USDA guaranteed loan. This is the most common one. Guaranteed loans are for low to moderate income buyers and come from regular private lenders with the USDA backing them up. You apply through a bank or mortgage company, just like a conventional loan. USDA guaranteed loans are offered in 30-year fixed rate terms only, and most lenders look for a credit score of at least 640. Type 2, the USDA direct loan. Direct loans are for very low income buyers and come straight from the USDA itself, not a private lender. The current interest rate for direct loans as of early 2026 is 5.00%, but payment assistance can drop your effective rate to as low as 1%, which is an extraordinary benefit for families who truly need it. The trade-off is that income limits are much stricter, and you can't apply online. You'll need to visit your local USDA Rural Development Office. For most buyers watching this video, the guaranteed loan is the one to focus on. It's faster, more widely available, and covers a broader income range. Who qualifies? Let's walk through the main requirements. Income limits. The 2026 USDA loan income limit for households with 1 to 4 members is $119,850 and $158,250 for households with 5 to 8 members in most U.S. counties. Limits are higher in expensive areas. One important detail: lenders must include the income of all adult household members, even if they are not applying for the loan, which is unique to the USDA program. Credit score. There's no official USDA minimum, but most lenders require a credit score of at least 640. Debt-to-income ratio. Most borrowers need to keep housing costs within 29% of gross income and total monthly debts within 41%. Property location. The home must be in a USDA-eligible area. You can check any address on the USDA's official eligibility map. Primary residence only. You can't buy a second home or investment property with a USDA loan. The cost. What do you actually pay? Zero down payment doesn't mean zero cost. Here's what USDA loans do charge. There's an upfront guarantee fee of 1% of the loan amount, which can be financed into the loan, and an annual fee of 0.35% of the remaining balance added to your monthly payment. To put that in real numbers, on a $250,000 home, the upfront fee is $2,500 rolled into the loan, so you don't pay it out of pocket. The annual fee adds roughly $73 per month. Compare that to FHA mortgage insurance, which typically costs more and lasts longer. Despite these fees, USDA program costs are often lower than the expenses associated with private mortgage insurance or fees from other loan programs. The pros are hard to beat: zero down payment, competitive interest rates, lower insurance costs than FHA, and no loan limits. Your max loan amount is based on your ability to repay, not a set cap. The cons: strict geographical requirements limit you to specific rural and suburban areas, and the loan is only available for primary residences. Also, because USDA loans involve an extra layer of government approval, The underwriting timeline can take slightly longer than other loan types. Plan for 30 to 60 days to close. Is a USDA loan right for you? If you're buying in a small town, suburb, or any area outside a major city, and your household income is under the limit for your area, a USDA loan should be at the top of your list. It's one of the only remaining zero-down mortgage options available to everyday buyers in 2026. That's USDA loans fully broken down. Next up in this series, we're tackling jumbo loans, what they are, who needs one, and what it takes to qualify. Subscribe so you don't miss it. Hit like if this helped, and drop a comment. Did you know USDA loans existed before today? I'd love to know. See you in the next one.